What's up everyone and welcome back to the Modest Wallet. There are a ton of low-cost, diverse, high-performing index ETFs from Vanguard, but there's two that stand out above the rest. VOO, which is favored by Warren Buffett, and VTI, favored by Jack Bogle, both prolific investors. In this video, we will dive deeper into VOO and VTI with a basic understanding or overview of them, a portfolio makeup, and some key similarities and differences between the two. Stick around for the entire video to find out which one we prefer. All right, maybe you have no idea what I'm talking about when I say VOO or VTI, and that's fine. Essentially, they are exchange traded funds, otherwise known as ETFs from Vanguard, and basically when you buy a share of one, you are buying an entire group of stocks representing an index. In other words, you get the growth and value of owning amazing companies all in one share that can be traded just like a stock. So what is VTI? When you buy VTI, you are buying the entire stock market. So you'll get small companies, medium companies, and large companies in the United States. What is VOO? When you buy VOO, you'll get 500 of the largest companies in the United States that are part of the S&P 500 index. Most index funds are market cap weighted. That essentially means that the more valuable a company is, the more it represents in the particular index. Both VOO and VTI are cap weighted index funds. VTI consists of 4,156 stocks and has over 1.3 trillion in net assets as of November 30th, 2021. Take a look at the different stock market sectors and how they are represented in this fund. Technology is represented by just under 30%, with consumer discretionary at 16.5%. Industrials and healthcare are at around 12.5%, and financials is at just over 11%. The top 10 holdings of VTI are on the screen. As you can see, most of these are household names, with the top 10 making up about 26% of the total net assets of this fund. VOO consists of 512 stocks and has over 827 billion in their net assets. As we look at the 11 different sectors of the stock market and how they are represented with VOO, you can see that information technology is just under 30%, with consumer discretionary at 13.2%, healthcare is at 12.7%, and financials and communication services right around 10.5% apiece. Let's look at the top 10 holdings of VOO, and you can see once again the exact same holdings as VTI. The only difference, and that's the only difference, is that the top 10 holdings for VOO make up 31.4% of the total net assets. So as I shared before, the total net assets for VOO is 827.2 billion compared to VTI's 1.3 trillion. VOO assets under management, or the AUM, is 269.82 billion and VTI is $291.26 billion. Also, just to continue the recap, VOO consists of 512 stocks and VTI has 4,156 stocks, which makes sense since VOO is an S&P 500 index and VTI is a total stock market index. Dividend yield is a dividend expressed as a percentage of a current share price. It's an important metric to track when you are researching stocks or funds to invest in. The 12-month trailing yield is 1.26% for VOO and 1.22% for VTI. Although they are slightly different numbers, the minor, and I say minor, difference will be almost unnoticeable. The expense ratios of both VOO and VTI are identical at 0.03%. If you're unfamiliar with an expense ratio, we are talking about the annual cost of owning a fund. Some perspective on this: if you bought $10,000 worth of either of these, you would pay just $3 annually. Before we go into what you really want to know and what truly matters, which is the performance of VTI and VOO, I just wanted to take another look at the portfolio makeup one more time, side by side, so you can compare easier on one screen. The top 10 holdings, remember, are literally the same, with a little over 5% difference in the total net assets. The sector exposure is very similar, as technology and consumer discretionary top out the list. nothing else stands out to me as I continue to glance at the sector exposure. All right, the moment you've been waiting for between VTI and VOO is the performance. I want to specifically look at the 1, 3, 5, and 10 year for each. Even though I am sharing the annual returns since inception, I think that is a bit misleading because the fund's inception date, or when they started, are much different, and one was around for 2008, which I think is an unfair comparison. As we look at these two side by side in the 1, 3, 5, and 10 year annual returns, there aren't any glaring differences. Both have had very successful annualized returns in the short and long term. And really, anytime you can have 15% or higher annually over the 5 and 10 year window, you should really be thrilled with that. Given the nearly identical performance, volatility, expense ratio, and other metrics, how do we decide between VOO or VTI? I'm going to suggest 3 factors to consider. First, in a 401k or 403b, you may not have a choice. You might have an S&P 500 option, but it doesn't offer a total stock market index fund. In this situation, take whichever one your workplace retirement account offers. It doesn't really matter, and you shouldn't view that as a problem or something to really worry about. Now, if you do have a choice, or you're investing in an IRA or taxable account where you absolutely do have a choice, then I'd suggest one of 2 approaches. If keeping it simple is your goal and you want all your US stocks in a single fund, go with VTI or another total stock market index fund. For example, if you invest in a 3-fund portfolio, I prefer a total stock market index fund. It's not because I think it'll outperform the S&P 500. We just saw that the performance numbers are pretty much identical. What VTI does give you, however, is added diversity. If the volatility or risk is effectively the same and the performance is effectively the same, why not get the greater exposure to the equities market? On the other hand, if you want to mix it up a little with your portfolio into several US asset classes, as some people tend to do, you may prefer the S&P 500. Why, you might be asking, and that really is because it gives you more control over the specific asset allocation you might be trying to achieve. So there you go. There are some of the key differences between an S&P 500 index fund with VOO and a total stock market index fund with VTI. We specifically looked at VOO versus VTI, but these considerations apply to similar funds from Fidelity, Schwab, or other investment companies. The good news is that while there are differences between the 2 types of investments, both are excellent options. All right, guys, I hope you found value in this video. As you likely are making a decision on what to do with VOO and VTI, if you did, definitely smash that like button. That really does help us out. Don't forget to subscribe. Let us know which fund you prefer in the comments, and I'll see you in the next video.